Hello traders, Gary Wagner here. It is approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Tuesday, the 17th day of July, and this is the daily report for gold and silver. Following a testimony given to the U.S. Senate by Fed Chairman Ben Bernanke, we had the markets a little firmer at the beginning, right before, and have softened as of this point in time. Currently, we have gold trading off about $6 on the day. 1582, as you can see, is a current print with a low of 1577.70 and a high of 1600. Silver unchanged on the day currently, as you can see, currently trading at 27.26 with a low of 26.68 and a high of 27.75. You know, it was a interesting testimony that Bernanke gave today. And in terms of a reaction, the stock market, without a doubt, that market went higher today. And in fact, we saw gold higher. As you can see on this 60-minute chart here, you can see that it did move higher into some nice positive territory and then slowly began drifting lower. The one thing on a technical basis that I would like to point out is the moving average convergence divergence. You can see how these on gold are really getting into a oversold scenario. You can see how low they are. And at the same time, when we look at it, and again, these are very, very short-term studies, our silver is mid-ground, certainly not in an oversold scenario yet, but you can see that they are certainly in a different space than the gold. Just an observation. Traders, you know, yesterday I talked a little bit about the fact that there were a couple of critical areas that I felt are really important for gold to hold. And one of the areas that I mentioned was this 1581. You can see that right in here. And one of the reasons in terms of technical data that really draws me to the conclusion that this is a very important area is that as this market moved up, and this, of course, this is 2011, this is 2012, this is July, really the beginning of what I call that July rally, and this is where it went pretty much straight parabolic. Prior to that, the resistance areas had been 1581, right in here. You can see it, and it's just shy of it right here. For that reason, it is my belief that that is a really important area to hold. And you can see not only did we get real congestion and real resistance right here, but in the same hand, when we look at current trading activity, we're getting some real support and congestion just above this particular line. I do believe that it's important. We are currently trading above it. We are positioned right around this area. So this is an area we certainly want to watch. The sense that I got as I digest some of the information that came out during Bernanke's testimony today was that we're probably going to do some sort of new quantitative easing, but we're not going to do it now. The sense that I had, first of all, he said that the QE2 as well as twist had beneficial effects. They had worked, they were working. And he also opened the door for more or different types of monetary policies that would aid in kickstarting our economy. And so to me, on a technical basis, when I listen to that and look at the area that we're in, I believe we are in a fairly critical area. Because if the real belief is that we're not going to see quantitative easing for a month or 2 months, and it's probably not going to be next month from what many analysts have said, there could be some downside pressure on the market. However, we still have a couple of factors in play. Slowdown in China. What is their banking system going to do? The European Union's debt crisis. What is the central banks in Europe going to do? So there's going to be other factors besides the one idea that there'll be new quantitative easing, but it is something that we certainly want to be aware of and want to be on guard with. Traders, we are looking at a 240-minute Heikin-Ashi chart. I've compressed it to a point where what I'm really trying to look at or get a sense of is the overall direction of the market, different resistance and support areas, and how they're possibly going to affect silver in the upcoming trading days and weeks. The one thing that we can say that we have noticed is that, let's say over the last 3 or 4 weeks, we have had a succession of higher lows. And higher lows, of course, is what we look for in any kind of an uptrend. But we're in a consolidated market, meaning although we're getting these higher highs, we're getting a real strong band of resistance just below 28, call it 2750, 2760. For us to feel really bullish about this market, we obviously need to see it track back towards these highs and, of course, be able to break above them so that this area right in here, this 2740, 2750, becomes support rather than resistance. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.